Welcome to the Swing Trading Web Cycles channel. It's January 13th, 2023. It's Friday. The market has closed. It's the end of the second week of the the second trading week of 2023. We're going to cover natural gas today. And what we're going to do is we're going to start with a seasonality chart. Just interesting. We trade price action on this channel, but always good to have additional pieces of context. Because really this market looks like it's waiting on a catalyst, and maybe it's the reopening in Freeport. Then we're going to talk about when is it quote unquote safe to get long. And I put that word safe in quotation marks because you really shouldn't be using that word with respect to markets. What you should really be thinking about is what is a entry that is low enough risk that it fits my risk tolerance, right? That's the way that you want to think about it. How do I assess risk from different entries? And we're going to talk about that in detail. And part of that is understanding cycles analysis, or at least the little bit of a framework. There's a pinned comment. You'll see a link there to a write-up. It goes in great detail about how to sort of think about cycles. We also have a few videos in there. So I'm not going to go into a great amount of detail, but we are going to talk about just some of that framework that you can use to say, okay, now it's pretty clear that a new daily cycle has started, for instance. And they're just price action cues. And finally, we'll talk about the long-term chart for natural gas just to give some context, right? Zoom out a little bit, because we've really just been consolidating really for this week, more or less. And we obviously made it to new lows today, so we just kind of crept there. But let's look at the seasonality chart first off. So this is a seasonality chart for UNG actually. This is Trend Spider, so it's going back 13 years. And notice this first view does exclude 2008, so it has some exclusions baked in. So we'll leave it at this with those exclusions first. And you can see it says that the winning month, the April is a winning month 77% of the time, with an average gain of about 4.54% thereabouts. Whereas January was only positive 38% of the time, and February was even worse. So again, it's all about the price action here, obviously. And you can see December is actually the worst month in terms of the percentage of times it's positive. But just good to know what you're kind of up against. So you're really talking about April looks like a pretty good month, and then August. Again, this is just background information. It does, like, as we're consolidating here, clearly the market is in need of some kind of catalyst. And it makes sense, especially since this is a weather-driven thing, that you're going to see some. So it's good to know what we maybe have ahead of us, and that, maybe February not so great, right? And so let's look at natural gas, and let's think about, and we'll also look at oil and UNG as well. And again, take a look at the content on cycles so you get the deep dive there. But this now puts us on day 26. So we possibly had a daily cycle low on day 21. That was a swing low. That's how you identify these things, right? That's how it works. And this blue line is a 10-period moving average on any chart. The blue line is always going to be the 10-period moving average, and the yellow is the 200-period moving average. And since these are daily charts, that's your 200-day moving average. This is your 10-day moving average. So we had a swing low, right? And this was a nice big green candle. We pulled back, obviously, still stayed green, but, upper wick, which is always not super positive. And then we failed the next day. So again, a swing low is how an uptrend begins, right? And so this is a failed uptrend. I mean, it was an uptrend on a lower time frame, but it really didn't go anywhere on the daily time frame, right? And then we had another swing low here, right? That was our candle from Wednesday, and that became a swing low once we went above the high from that candle, which was 3.777. That happened on Thursday, but this is obviously a very feeble looking candle. And then it makes another low below this low and also takes out that low. So basically it gives us a new low for this whole time period, right? And so that is day 26. We've seen other cycles that this was 30 days, this was 33 days. So we're getting in the timing band, and it's like, okay, we're going to get to a point where it's now, let's say, quote unquote, late, meaning this is a longer than usual time period before getting the next low and starting the next rally. Now, again, just because we start the next rally doesn't mean it's going to be bullish. Look at this little rally that was just 5 days and then just failed, right? And so the way that one of the cues that you use for, one of the boxes you kind of have to tick for a new cycle to be confirmed is you've got to close above the 10-day moving average. And I'll tell you, the moving average itself is nothing magical. That 10-day, you can replace that with an 11-day or a 9-day. It'll do the same thing. The way to think about this is such a short-term moving average, right? That at some point price is going to check back to it, right? Notice the 200-day doesn't move much, right? Look at how much price has moved, and the 200-day moving average is not really moving much because it's a really long-term average. It's taking into account all those previous days, and these days aren't as meaningful. Whereas a 10-day moving average or a 9-day, as I said, or an 11-day or even an 8-day doesn't really matter. It's a short term enough that at some point price is going to have to cross above it. Now, price can go long periods where it doesn't cross above it, and that's when you have a really bearish quote-unquote cycle. But at some point, it's going to cross back above it, right? And you can see that's what happened in all these cycle lows. Like, this was your daily cycle low here, but it took a few days before price actually closed above it. This was your daily cycle low, took a few days before it closed above it, right? So you're kind of anticipating the close above it potentially, right? Like, and that's an aggressive entry, I should say, right? When you've got a swing low and you're like, okay, let's go for it if the risk reward is there on a lower time frame in terms of stops, for instance. And so this thing hasn't closed above the 10-period moving average yet, notice. And you can see right there it kind of tried to and then just couldn't, failed. And again, the closing above the moving average isn't really anything special because if you think about it, you can't close above a short-term moving average like the 10-period moving average without making a higher high. It's impossible. Price has to make a higher high above a previous candle in order to close above that, right? And in fact, like this is a case where price made a higher high and still didn't close above it. In this case, price actually closed above it like a higher high, but it got nowhere close to closing above the 10-period moving average. All that to say, if you wait for a cross of the 10-period moving average, understand that you're a little bit delayed in your entry, but it is also a little bit less risky, right? Again, that word of risk as opposed to quote-unquote safe. Because you might be tempted to say, oh, well, it's a safer entry. If you want to use that nomenclature, that's fine. But that's the way you might think about this, right? That like this thing has gotten to a point where now to mitigate the most risk, you're maybe waiting for a close above the 10-period moving average. And even obviously that is no guarantee. There are no guarantees in markets or anything in life, for instance. But as we get deeper into this cycle, and again, that just means price has declined for a really long time. Price can't move in a straight line for too long. And in fact, this period of like choppiness kind of slowing it down makes sense. We're consolidating here is what's happening. And we'll look at that on the lower time frames. That's all that's really happening is consolidation. But you would expect we're going to get the low at some point, right? Maybe we're going for like a 30-day cycle, so maybe later next week. But that doesn't mean it's going to be bullish, right? Like we could get a situation very easily where, right, we get this big move down and we get like 4 or 5, maybe 6 days up, and then we make a lower low, right? Or even 10 days up and then we make a lower low. So it would be a potentially tradable bottom. And that's why it gets a little bit hairy is because like this is a perfect example. I think this is your quintessential example where you had this like droopy period, price closed here, you got your little swing low. So your swing low here, just to be clear, that's your low candle, and your kind of go signal on the swing low was the high of that candle, right? So that in that case, that's $8.30. Wow, it's kind of crazy how high it was versus where we're sitting now, right? And so on that entry, you didn't actually close above the 10-period moving average until this day, and then the next day you got a big reversal. Notice the next day this becomes a swing high, right? Like we closed below the low of this day. So all that to say, you would have gotten in like right when the trade ended, right? If you're in a bearish cycle, so you have to kind of weigh those different parameters, right? Like maybe you're actually getting in super late and the rally is basically over. That's why you're really gonna look at the lower time frames for your cues. And as we talked about in the last video, we're expecting an inside week next week, but at the same time, we've now made a lower low and we've closed closer to the lows. We didn't close on the lows, but very close. And we'll look at the lower time frames. We're getting a little rally on like the 1 hour chart. But so it means we're set up to open very close to the lower end of this range but probably still inside. And so more and more, this is starting to look like it is just week 11, right? Like this was a short cycle at 16 weeks. This is a new cycle that topped out at week 4, and we're now drooping lower. But again, this droop lower really does suggest it needs a bounce, just because in a healthy trend, price has retraces, right? It has counter trend rallies to continue to move in the direction that it's going. Which is to say, if we're going significantly lower, you would actually expect us to bounce a little bit. Although at the same time, we did have a little bounce this week, but you know, it's all relative, obviously. And so let's look at Boyle and UNG. And so just remember that when this Boyle is making all-time lows, that's a very dangerous situation to be in. It actually didn't make a new low today, even though natural gas did. So this thing doesn't always move in lockstep with natural gas. But let's look at what we did on the weekly. Right, so this is set up to open closer to the lows on the weekly. So maybe not the inside week we were expecting, because or opening as an inside week because of where we're kind of set up to close. And just on your upside level, just remember is that $15.73 level. That's your monthly high, although at this point, or your monthly open, although at this point, we're just kind of drooping into the abyss. Let's see, what does UNG look like? Did we make a new low today? Yep, UNG did make a new low today. And again, we've kind of created a situation where, you know, maybe we don't get that inside week. And again, take a look at the pinned comment to see the previous video where I talk about, you know, those inside week levels. We could just as easily kind of open up, still back up inside that range, because again, it does seem like price is consolidating, almost just kind of waiting on a catalyst. And so let's look at some of that lower time frame price action really quickly. So this is your hourly chart for natural gas, and you can see we're really just consolidating inside this parallel channel, and the channel itself is meaningless in the sense that, like, it's not a physical structure. It's just showing you where price, like the areas where price seems to be having some trouble kind of getting through, right? Where the buyers dry up and or too much selling pressure shows up. And you can see we have brief periods above it, right? This was even this was 2 hourly candles that were green that closed above it. Then you have a little bit of consolidation, and then we fail below. And you can see this. I hope you can see that. Like the downtrends, like these things are clear as day. That's a low, lower high. That's a low, lower high. That's a low, lower high, right? Like you can, and then you can see we kind of consolidate here a little bit. We start a little tiny uptrend, but then we get rejected, like by two massive 1 hour candles that, I'll get rid of this, that take out this entire move. Like that's the way I kind of think about it. This is like hours worth of progress that are just wiped out in 2 hour lead candles. But then we got pretty nice, like this is not the nice bullish kind of reversal. This is your little bull flag, higher low, another higher. So we got another little uptrend. We made a higher high above here, but notice we did not get back to here, right? And this is a lower high than this, right? So, you know, like it's not difficult to kind of draw, you know, your sort of downtrending line for all intents and purposes, right? And so, and this is another lower high, and this is another potential lower high. So although we're in a range, we're certainly pressing the lows of that range more than anything. I mean, obviously we wicked below it multiple times. And so there's nothing much doing here. It's not a great long, it's certainly not a long, but also not an amazing short, because price just isn't following through. You can see this last 1 hour candle, the one that made the new low, immediately wicked up, like immediately got a rally. Let's look on the lower time frames. Let's actually look at the little 15-second chart. I like the little 15-second chart because you really can see the structure, right? And so that's your low right there, your bottom tick. And then you can see a real choppy mess here, but holding this higher low. And then we get a nice little higher low. And then we just kind of consolidate. So you can kind of see the uptrend kind of ended. We chopped around here a little bit, and then we did this, and that looked nice, healthy, and then the uptrend ended, right? Now we're, well, like sloping slightly, ever so slightly higher, but that healthy uptrend after the low, the bounce, if you will, off that low, just kind of sputtered out. So again, not something to get excited about going long here, but also not like a compelling short either. We just need more time. This is just not a great market. I will say small caps look like they've come to life, just broader markets. Definitely take a look at the broader market video that, again, in the pinned comment. Like, that's something that's moving. It's tradable, right? And let's look at those lower time frames really quickly for Boyle and UNG. Is there anything significant? So on the hourly chart, so we close the hourly chart as an inside candle. That is significant. That's important to know about those levels. It's an inside candle there and there. Those are your levels, right? So high about $11, low of $10.42. But notice, just this is a clean downtrend, right? That's a little low. So you can kind of see that's a low. Well, you even went all the way down here, and then you made a lower high here, then you made a low. Now, this is either going to become a lower high and continue the downtrend, or we're going to get a reversal attempt by making a move above 11. But that kind of tells you you're kind of lying in the sand. But again, I think this thing is very dangerous, hot potato. What is UNG looking like? Same exact structure, just obviously different levels. So in this case, that inside candle has a high of $11.26 and a low of $10.76 approximately. But again, clean downtrend here. But yet, so clean downtrend on the hourly chart, but still kind of consolidating. Like you can kind of see this is just a consolidation box. Again, it is pressing the lows though. That's important to note. And so we'll close out by looking at the long-term chart for natural gas, as I mentioned. And so, again, we've talked about this on previous videos. If this consolidation ends up being consolidation to the downside, the next logical level is right around $3.18. And then below there, we fall into this potential vacuum that could take price all the way down to $2.40. And that's just based on this cluster of price action. On this chart here, this teal line is the 50-period moving average, so it's your 50-month moving average. So this would be the first month that we're closing below it if we do close the month below it here. So that kind of gives you an interesting, like, that's not surprising, right? All of our major cycle lows have closed below it. And that's what I wanted to just kind of bring up. Like, look at this context. This is what I kind of had put in the Twitter post, in the Reddit post. You have these huge drawdowns, right? That's 81%. And I know what people will say, well, no, there were different factors. Of course, there's always something different. But all I'm saying is after these big swing highs, you get huge moves down. These are all like in the 80% sort of range. Where are we at now, folks? We're at right around 65%. Isn't that interesting? That taking us down to around 240 would be 76%. Isn't that interesting, right? Like that gets us into the range of these. I'm not saying that means we have to get down there, and that's not the reason I think we get down there. It's more actually this cluster of price action. It's just interesting how those things line up as well, right? So you want to be patient. Let this thing come to you. Don't try to buy Boyle as it heads to zero and they do some kind of stock split to get the numbers back up. Like, just be careful out there. But I will continue to provide updates, and if you're not following on Twitter, you definitely want to do that because I'm able to give more real-time updates. But man, this thing could have a lot more downside because notice these are not declines. This has been a 4-month decline. Take that into context. This is your swing high, right? Your swing high from August. We've only been right? That's right. We've only been declining for 5 months. This is month 5, right? There could be a lot more wood to chop, right? So just be careful out there. That's our update on natural gas. We'll leave it at that. But again, we'll continue to update on this important market. Just be patient as it consolidates and be careful if it does break to the downside, obviously.